Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, April the 9th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I also talk about my option strategies I'm implementing into my portfolio based on the assumptions I come up with in my market analysis. Also, for you folks, I have all kinds of webinars where I've streamlined the process for you to find the optimal option strategy for any given assumption. We don't just look at a bullish assumption and pick an option strategy out of the hat, say a call, long call. No, that's not what we do. We look at what's going on around this underlying and we find the best strategy suited for the environment around that underlying. All right, so please check out Pro Trader Strategies as I go into detail of all of the option strategies for you guys to understand and really take a different perspective of looking at these different options. All right, so let's get on with the economic data. Across the pond, really not a whole lot to see there. Actually, sorry, we did get German industrial production coming in at negative 1.6%, expected to be a positive 1.6%, so a massive miss on that headline number. They did revise last month's number, albeit slightly, but it was only 0.5%, not missing that or beating that 3% miss that we got there. All right, and then here in the United States, we got our core PPI, which is Producer Price Index. This is a gauge of inflationary pressures on the manufacturing sector. So PPI, or service sector it could be, but basically on the inputs that a company would expend for the byproduct or the products coming in there. Anyway, core PPI, Producer Price Index, coming in at 0.7%, hotter than the expected 0.2%. Now remember, this number for the core is going to strip out food and energy there, so it's still running a little bit hot. When we do the PPI, add in food and energy, still remaining at that 0.5% higher, coming in at 1%, expected to be a 0.5%. Now, we also got here in the United States final wholesale inventories that rose by 0.6%, expected to be 0.5%. Now, are these inventories moving higher because they're building inventories? No, we saw it show up that actually sales for these wholesale inventories started dwindling again, dwindling a bit. So buyers not coming into the market, but they're building inventories there. That could start weighing on some of these companies' earnings. Okay, so keep your eyes out for that. We're heading into earnings next week. It's going to be starting full swing, so we'll be talking about earnings trades and things of that nature next week. Also, we'll have to keep an eye on some of these data points that we've been looking at. We've seen pretty good manufacturing numbers out of the ISM and across the pond. Well, it's starting to look a little iffy here with the inventory numbers starting to move higher, PPI. Now, next week, we also get the CPI, Consumer Price Index. We're going to have to see if the producer is able to lay off some of these higher costs to the consumer, all right? So if it starts laying off on the consumer, that's going to really start signaling inflation here, and that would lead us to believe that interest rates are going to start moving higher. Something to keep an eye on. The 10-year note yield, 161, is that key line in the sand that we're going to be keeping an eye on. If we can't settle below 161 interest rate, being 160 or lower, then that would start leading us to believe a technical setup shooting for a 2% print in the 10-year. So next week is going to be very interesting with the interest rates, CPI, or the interest rates in the bonds, the CPI, all of those things, and earnings added on to it. It could start seeing some volatility seep back into this market here. Something to note also, Consumer Price Index, CPI, over across the pond in China. We got that late last night, so we didn't really have time to talk about it. Came in at 0.4%, but the PPI number, Producer Price Index, coming in at 4.4%, hotter than the expected 3.6%. So seeing inflation in China, not really able to offset it to the consumer at this point because we didn't see CPI increase as much as we're seeing that PPI, but we're going to have to keep an eye on these numbers. Like I said, sometimes it takes a little longer for those higher prices that the manufacturer or the service PPI people are seeing. to offset to the consumer. But some very interesting levers and pulleys going on in the market that we're going to have to keep an eye on into next week and the rest of the month for that matter. We've got crude oil just unchanged for the most part. Yeah, it was in negative territory, but only 2 pennies, not like negative territory I'd like to see. And we've got bonds trying to claw back into positive territory right now. Again, unchanged, really kind of quiet here across the board there. Bitcoin up 600, 700 points. Well, it's still kind of quiet for Bitcoin, to be quite honest. And gold futures retracing all of yesterday's gains as it bumps up against this trend channel here, or trend line, I should say. It's not really a channel. And that 200-day simple moving average. Now, we talked about this yesterday. It was going to be pretty tough to get through both of those, as that will act as a double resistance, if you will, or a heavier, thicker line in the sand. But we did try to test that again today, and it failed, as we can see the market selling off back to the point of control there. All right, NASDAQ is in negative territory after trying to print a new all-time high. Now, E-mini S&Ps, we printed a new all-time high in 6 of the last 7 sessions, I believe, and we could be on pace for that again today. While we got that print in the E-mini S&Ps was overnight, but you know, we're going to be taking more credence in those overnight trades these days. But the NASDAQ is in negative territory, but it's only 16 points, folks. That's nothing really for the NASDAQ, albeit it is starting to make a little bit of a toppy there if we finish the way it is now. And Dow Jones Industrial Average up almost 100 points. This print was printed during the day session, so we did get another all-time high in the Dow Jones Industrial Average. Now, E-mini S&Ps, we did get an all-time high, but that was like right after the open of the overnight session. Having said that, if we break it down into the mini S&Ps, 30-minute candles here, you can see that the print was overnight right off the open, and for the better part of the evening, it was pretty darn flat, and really no incentive to move in either direction. And this is one of those things I've been talking about. I think that we're going to see this for a while now as we start to come into earnings season and see some of these earnings and how the market's going to react to those earnings. Because remember, last round of earnings, we saw them actually do better than what was expected and still saw some sell-offs in a lot of these underlyings after their earnings, despite the fact, like I said, that they came out with better than expected earnings. That's not usually what we see, but we were seeing that the last time around. All right, so Schlumberger. Like I said, we're doing trades on swing trade setups, and then we're finding the optimal option strategy for that given underlying. Now, Schlumberger, let's take a look at Schlumberger. It is a stock that's below 50, so it's really difficult to do option trades around this for the most part, but there is an options trade that we can put around this for a bullish assumption. Now, this was based on yesterday's setup where we have this nice little bottoming candle here. Now, obviously, it didn't get confirmed. We did settle above that 200-day or 50-day simple moving average, which was something I was keeping an eye on and got a little bit early on this trade. I did put it late in the day when this setup was happening, but today would be the day most people, probably with lower risk tolerances, would wait for a confirmation. Now, obviously, I haven't done this because I put this trade on yesterday, and it was on the synthetic long in this trade. So, you know, rather than going out there and just buying the stock, I put on an options trade so that I can limit the amount of margin I have to put up for this same type of performance that you would get from an underlying. If I bought 100 of the underlying, I'd do this synthetic long trade. It is using options. We don't have to put up as much margin, and we still get dollar for dollar performance as if we owned the stock. So with that being said, in Schlumberger, I went out there and bought the synthetic long, like I mentioned, and sorry, can't find it. Anyway, went into the June, and I bought the 25 calls, sold the 25 puts. Adding those deltas together, that gets me long 100 of the underlying, okay? By selling a 50 delta put and buying a 50 delta call, those add up to long 100 deltas. So dollar for dollar, market goes up, I make $1, market goes down $1, I lose $1. As we can see right here, it's down 33 cents. I would be down 33 cents as of today with this options trade. Doesn't always work that way, but the way that we build it out as a synthetic long, it will perform just like that. And with that being said, yeah, so I did that for 175, so right around 26.75. So I'm right around break even actually right now, just slightly underwater from where I put this trade on yesterday, because when you add in what I paid on the debit and the 25 calls, that should give me my break even. That break even was right around 26.75 when I put this on. So slightly underwater, but at the end of the day, only by a couple of pennies at this point. And it's not really broken this pattern, but anything going below a settlement below 26.44, which was yesterday's low on this wick here, that break below and settlement below that number, I'm going to pull the ripcord on this trade because we're setting this up on a swing trade. That's exactly where you would put a stop if you had on this trade for a long, and that's exactly how I'm doing it with this trade. It's a synthetic long. I have no protection to the downside with this trade other than my finger on the mouse to click it if I see it go below that 26.44 area. All right, that's it, folks. Hope everybody has a great weekend. Please take a moment to go over our disclaimer at the end here, as we're an educational company. And finally, I hope you guys all have a great weekend. And if you can't take that, take it easy.